Hello, everyone. Hi, everyone. Welcome to tonight's webinar on financial management and fund development. Please know that the webinar is being recorded and you'll receive a copy of it probably tomorrow. Victoria is pretty speedy with that kind of thing. We want to thank tonight's webinar sponsor, the Superior Health Foundation. The foundation is a health-centered grant-giving organization serving the Upper Peninsula of Michigan. If you want to check out their website, please visit it at superiorhealthfoundation.org. This is the last webinar in our UP Nonprofit Recalibrated series. If you want to check out any of our previous webinars that are listed there, you can go to our website and click on the Nonprofit Capacity Building tab, and they'll all be there for you to view. And a week from today, we'll have our member mastermind. That's a kind of a low-key opportunity for members to talk a little bit more about tonight's topic in detail and to troubleshoot and brainstorm ideas. So we hope you'll join us for that. The Zoom features we're using tonight include the Q&A box. We'll have time at the end if there are any questions, so please feel free to submit them in there. The chat box you can use amongst yourselves to visit with each other. We aren't going to be monitoring that. And if you have any technical difficulties, please use the raise hand feature and either Vic or I will contact you privately to help you out. I'm Karen Thompson, and I'll be presenting the information tonight on finance, and Victoria is going to be presenting the information on fund development. And with that, I'm going to stop my video. Here we go. And we'll move on. So I wanted to start with a couple of slides that will serve as a reminder for annual required filings. You'll need to ensure that each of these are completed as applicable. This one is with the state of Michigan. The license to solicit is the only filing that might be optional for you. So it depends on your contribution level, or if you're hiring a professional fundraiser, you'll also need to file one. And we have listed there the organizations that are exempt from filing, and that link will be included with the slides when we send it out to you if it might be the first time that you're filing. Here's another state of Michigan requirement. Filing in the fall each year, they ask that you update them with the contact person for the organization, if your mission has changed, and who's on your board of directors. There is a penalty for not filling this out. It's $25 a year if you get beyond the due date of when that's required. So keep an eye on both of those annual filings for the state. And then this, everyone's pretty much probably familiar with the annual filing at the federal level, your Form 990. And a lot of people refer to this as a tax return. For the nonprofit sector, it's really not a tax return. It's considered an information return. Know that it's open to public inspection. It will state that literally on the first page of the form. And there is also a section in the 990, a disclosure section, and which you're required to state how you make your 990 available to the public. So as charities, yes, we have a requirement to make this information available to the public. I wanted to include this little fun fact about the 990. If you're not familiar with the Schedule B, it's the Schedule of Contributors, and it lists the names and addresses of those who contribute $5,000 or more in cash or property. And the IRS has told us that you don't need to include this when you're providing your 990 to the public. So when you put your 990 on your website, or you are providing it for a grant application or just responding to another request for it, pull that out of there. that protects your donors' identities. This next section, I wanted to include some information on QuickBooks. Many nonprofits use QuickBooks for their accounting software. So the next couple of slides will help you if you're trying to decide which version to use, or if you're thinking about switching from one to the other. So on this slide, I'm highlighting the pros of each version. I'm a desktop user. I've used the online version a little bit, but I'm a big fan of the desktop version. And a couple of big keys, pros, in my opinion, for the desktop version is the level of reporting flexibility that's included and being able to split payroll across grants. And then here's a list of a couple of cons for each type of the versions. For the desktop, having to share access across computers can be a challenge. And on the online version side, I've heard from many people that reporting is clunky, that you may not get the level of reporting that you need, especially for grants. We encourage you to check out Techsoup. It's a website that has discounted software available and hardware available specifically for nonprofits. And you have to get registered with them. And part of that process is just sending in your IRS determination letter so you can prove to them that you're tax exempt and eligible. But there are some nonprofits like service clubs that aren't going to be eligible. So you can see there's a pretty steep price difference between purchasing it from Techsoup versus Intuit. So we'll hope you check that out. Here are some things to consider in helping you decide which version to use. Probably the main one is listed there right at the top. Who needs access? So if you have multiple people who need to access that file and they're in different locations, that's going to be weigh pretty heavily for you to consider using the online version. And TechSoup has a really good article about what to consider if you're going to go to the online version. So I encourage you to check that out too when you have a moment. For training resources, YouTube is a great resource. There are a couple channels that focus specifically on nonprofit videos, and I've listed those there. And I know, learning isn't necessarily everybody's thing. So if you need some extra help, I'd be happy to help you with some short-term assistance to get you started. If you're a member, you can use your member benefit to get some personalized help. If you're having any issues or need to create some reports, I could give you a hand with that. So we're going to switch gears to budgeting now. And this slide talks about, the whys of creating your annual budget. It's really a planning tool, both on an annual basis, tying to your program goals, and then tying even further to your strategic plan. And it helps with forward thinking at the board level. And it really, over time, you'll really understand the ebbs and flows of your organization as you see what money comes in and goes out. So it takes a little bit of time, but it's really a great evaluation tool. As part of the process, you'll want to have the budget prepared in time for your board to approve it before the start of your fiscal year. So once you know when that last board meeting is before the end of the year, then work backwards. And the rule of thumb is like a 3-month window, but that's, use what you need. But some of the things that might impact that timeline are performance reviews and the schedule of how long that takes. You might have board committees that need to meet as part of the budget planning process. You probably have a finance committee for sure that would want to take a look at that budget before it goes to the full board. And you might have large events or programs that could impact your projections. So take that into account. And you'll want to be sure and review your current year's income and expenses to get an idea of, did you have any unexpected expenses? Were they, they might have been a one-time thing, and that's fine, but you also might have some things that happen that you need to build in for the next year that you didn't plan for in the current year. Formal accounting rules state that you should only record professional services as in-kind services in your budget. So they're talking about like IT services, legal, accounting, those types of things. But if you have volunteers who provide services that you'd otherwise have to pay for, we really encourage you to include the value of those in your budget, because it shows the true cost of your program. And especially if you're going to go out grant seeking, you want to know the true costs. Be sure that the in-kind income and expenses zero each other out in the budget, because you're not actually going to be taking in any cash. Nothing in cash is going to be passing through your books, so you don't want to get that picture skewed. And review the timing of revenues and expenses. For example, do you have any large expenses early in the year, but maybe a big portion of your planned revenue might come in at the end of the year? So if that's the case, do you have the cash on hand to bridge you through that time frame? Hopefully you have an operating reserve that might help if needed with that, but just to keep that in mind. And QuickBooks is really flexible when you export it into Excel, because then you can add extra columns if you want to give some more comparative data, and it can help with illustrating how you're doing financially. So as part of our financials, I include a couple extra columns for like how far along in the budget year are we? And then another column for how far along in the budget are we? So if we're 50% through the fiscal year, have we met 50% of our income and expense budgets? And they may not necessarily match up. In fact, in most cases, they probably won't, but it's to understand, okay, why don't they match up? And to be able to communicate that then to board members. Well, we had, an expense that comes early in the year, so that's why that percentage is skewed. Okay, now when you are applying for grants for your program and you're hoping to get one, but you get 3, that's great. So you have a couple of different options. You can split the expense across those grants, but that's going to leave you under budget. So you're going to have to go back to your funder anyway, and you can negotiate that with them. We got other support from other funding sources. We'd like to expand our program, that type of thing. But it's not ethical. You can't charge the full cost of the same expense to multiple funders. And you're likely throughout the year, you're going to probably want to do some reallocating of funds. So have some policies in place with your board about what level of revisions can you make without coming back to the board to do a budget revision. You might have like a revisions that can be made within a category like office expenses, or maybe you can make changes as long as the total amount of the budget doesn't change. So just have those in place so that everybody's on the same page. And part of these financial reports is then they become a tool for the board, because the board has a legal responsibility to ensure that resources are being used appropriately. So they have to make sure that they have good data to be able to, you know, talk to the public about that. And they have to be reports that are timely and not, you know, a lag time of 6 months or something. So this helps them in their oversight of programming for the organization. A lot of board members may come in to your board and not have much financial literacy. So if that's the case, you'll want to include training during the orientation period of new board members and as needed. And we have some tools that can help with some of that education. So feel free to reach out to me if you'd like any of those tools. So at every board meeting, I've listed the two statements that you should be providing to your board. One is the statement of operations, and some people refer to that as your profit and loss. And the other is the statement of financial position or the balance sheet. And these statements really work together to show your financial picture. So the statement of operations, from that you can determine, well, what is our average monthly expenses? What's that total? And then you can use the balance sheet to figure out how many months of operations you have on hand by looking at your cash holdings. So they, you know, the balance sheet is one moment in time, and the statement of operations is a range of time, and they both work together. And on an annual basis, if you don't have an annual audit, you'll want to provide some other annual cumulative financial report for the board. And then, of course, the 990. And with that, you'll want to have a policy in place for how the board will be involved in approving that before it gets submitted to the IRS. You know, learning how to read these statements, it takes time. Not everybody has this in their background, and it takes a little patience. As a board member, your job is to ensure that you understand the financials and you know, not be afraid to ask questions if you don't. Our job as staff members is to, you know, generate and prepare those accurate and timely reports, and to support you as board members in understanding those reports. So we partner together to share our organization's financial reporting to the public. So this completes my section on financial management. And now I'm going to turn it over to Victoria, and she's going to talk about fund development. Vic?
Everyone, I'm excited to join you tonight. At first, I wasn't super sure about talking about this topic and really where to go with it. Because in all honesty, like many other nonprofit board members, fund development is not my favorite thing that the board works on. But as a board member, I know it's my responsibility to ensure the financial resources are in place. We learned that during Board 101, the first session of the series, and Karen referenced it earlier in the presentation as well. So now that you've learned a little bit about tracking the money, we're going to talk about where it comes from. And just for reference, when I talk about my experience as a board member, I am board chair of a small organization. We have one employee that works 10 hours a week. That's it. And we recently developed our first fund development plan. So this is kind of the lens I'm approaching this from. So we're going to talk about where this money comes from. This is current-ish data. So Giving USA issues these reports annually. This one is from their 2020 report, and it's using data from 2019. And so this is pre-pandemic. We may see that things change in 2020 or 2021 when the data for those years come out. But pre-pandemic, this is what the graph looked like. And I love showing this because so often when I'm working with organizations, especially ones that are new to the nonprofit sector, I hear things like, well, we just need to write a letter to a few businesses and maybe get a couple grants and we're going to be all set. That's all we're going to do. And it's going to fund all the stuff we want to do. And that's great. But like, contrary to popular belief, that's not where a majority of funding comes from. You can see here, if you add corporations and foundations together, it's 22% of philanthropy in the USA. So individuals are really important. And when we look at individual givers on our next slide from Giving Tuesday, this is from their Giving in Unprecedented Times report, which is pandemic data. So this is really new data that they collected, and it is not just from the Tuesday of Giving Tuesday, it's from the calendar year 2020. So we can see a majority of donors are those micro donors giving under $100. The bigger the gift, the smaller your donor pool. I encourage you to look at your individual donors right now prior to making your written fund development plan, which we're going to talk about in a second, because seeing where your funding currently is coming from and what levels your donors are giving at are going to help you in determining where you want to go and grow. So now that we know just a little bit about who's giving money, we'll be looking at it primarily from an individual lens when I talk today, but we will talk a little bit about corporate giving in some of the specific types of funds. We're gonna talk about writing a fund development or revenue development plan. And you'll see it's called fund development, revenue development, not a fundraising plan, because we're going beyond just specifically asking for money. And this plan is going to look at creating and enhancing relationships with our potential and active donors to come up with those revenue streams, both current and future. So as we talk through this plan, you'll notice we're going to go deeper than just saying we'll have an event and it's going to raise money. We're going to dig into who's doing it, why we're doing it. When you put together your fund development plan, it's an internal document that's only shared with those working in fund development and your board. It doesn't have to be something that's out to the public to see the nitty gritty of everything. I mean, you can make it public if you want to, but it's not required. This is something that can be used as an internal document. So the first question you want to answer in that plan is, why does your organization exist? This can usually be answered by your mission statement. Having the mission at the top of the plan is important because it guides the decisions you're making as you build the plan. Each step of the way, you should be reflecting back to see, does this method align with our mission? We're also going to answer the question in the plan of who is working on fund development. You're going to list out who's involved in their roles. This, again, can be your board members. You may have a development committee, volunteers and staff that are working specifically on this. Now, you don't have to name specific names. You don't have to say Victoria is doing this, right? But you can give a title, for example, the board chair, and then assign them a role or a task. So the board chair's role is signing the annual appeal letter every year. Or the marketing committee and the volunteers there may be responsible for the graphic design of the event poster and the annual report. Laying out who's involved and what their role is in fund development, make sure that all tasks are assigned. Next, we'll answer that fundamental question. Why should someone give to your organization? The section that answers this question is called your case for support. This is a clear, well-organized, persuasive narrative on your vision that includes the problem you're addressing, the plan to overcome the problem, and the call to action. This section is written so that everyone involved has a shared understanding and language about giving to your organization. We're also going to set goals in our written fund development plan. This may be a fundraising goal. It could be exactly how much money we want to raise. Actually, it should be. That should be in there. You may even break it down to the specific types of funds you're raising, and we'll talk about those types a little later. But there could be other goals that come from this, like the number of donors that we want to make sure receive a follow-up phone call after they've given a gift, from like the number that our board members will call, right? So individual goals for specific board members, or they can be really broad. Like, we want to add a certain amount of donor prospects to our list. specifically our email list if you're going to be using email marketing. So you can set both those specific dollar amounts as well as other overarching goals for engaging both prospective and active donors. And then why you need the funding. This is going to tie into last month's session of the UP Nonprofit Conference Recalibrated on strategic planning and operations. So if you haven't watched that recording, I highly recommend it. We want to know, are you keeping things status quo? Are you launching new programs? The strategic direction you're going in alignment with your mission really drives those goals that we're setting in the question above. How are you going to generate revenue? We're going to talk a little more about that in a few minutes, both specific strategies and techniques that you can use to get to your goal. How much will it cost? Budgeting for fundraising and fund development is important. In the business world, there's a saying, it takes money to make money. But many nonprofits shy away from accepting that. If the food for your fundraising event is donated and the printing of your annual appeal letter is donated, when you're budgeting, as Karen said, even though it's a little outside of those professional accounting standards, you want to put the cash value of in your plan just in case. You never know when something's going to change and those in-kind contributions aren't going to be able to happen. We want to be both aware of the amount that we need to replace if it falls through, and to look at, are we truly breaking even? If one of our in-kind contributions is critical and we can't break even without it, we shouldn't announce that event until we make sure it's locked in. You'll also use the budget when you're looking at the evaluation. And don't worry, we'll talk about evaluation later. Who are we asking to be involved? This is your list of current donors and prospective donors. You can categorize them and create a plan for cultivation and solicitation of each category. For example, asking someone with the link, ability, and interest in your organization for $5,000 versus sending an email to ask your volunteers to set up a Facebook birthday fundraiser are a completely different set of steps, especially if you haven't met with that prospective major gift donor. It's major gift in my world. It might not be in yours, that 5,000. Also, relationships with foundations. You can put them in there. Reach out to your program officer before you get your proposal in front of them. And then again, evaluation coming back into play. How are we tracking this? You need to have a plan. For startups, early stage, smaller organizations, all volunteer organizations, single employee organizations, it might just be an Excel sheet to start with. And the great thing about an Excel sheet is most of the time, a spreadsheet can be uploaded into a donor database at a later date. For our larger, more established organizations, you probably already have a database that can handle tracking this. And you can also look at that historic data. How has the donor been cultivated? Have they been solicited in the past? Have they been thanked? How have they been thanked? All of that should be in there. You should also have that donor and volunteer recognition plan. You can include that here as to when someone makes a gift, what are the next steps? How are we going to make sure that they're thanked in a way that reflects their gift? Everyone should be thanked, absolutely everyone. But I understand that, especially if you're getting a lot of gifts, establishing relationships with everyone might be hard. So there does have to be cutoff points just based on board capacity and if you have staff capacity. So who might get a phone call? Who might get an invitation to check out your program in person? I mean, if it's a large enough gift, you might do something like that. So putting together what recognition looks like. And then, of course, summarizing everything that we're doing. Your plan might be a lot of pages. I think ours is 13. But in the end, we have a very nice task list. We divided it out and put timelines for each task, who's doing them, just as a quick visual. So it's all in one place and you can reference it easily. So looking at the different gift types, when we want to diversify revenue, right? It's important that our revenue is diversified. So looking at the common types of donations, first off, we have our annual fund. You may know it as a general fund or an operating fund. But this is an unrestricted fund that you as the board and staff, if you're involved with creating that budget, donors are trusting you to use that money in that fund to best move the mission forward. It's not restricted to a certain program or a certain area. It's just general money that you can use to operate. Then we have our capital campaign funds. Not everyone will have a capital campaign fund. Actually, most probably won't at a given time, but this is a specific fund that's used for things like large-scale renovations, purchasing a building, or building something new. This funding is restricted specifically to that project that you're raising funds for. Major gifts are the largest contribution that your organization receives. The size that categorizes a donation as a major gift, like I hinted at earlier, varies from organization to organization. My small nonprofit that I'm on the board of, 5,000 would be huge for us. Someone like NMU, MTU, LSSU's foundation, they're going to have a higher threshold for what they consider a major gift. So it's up to your organization and your budget size to kind of set that definition of what is a major gift. And major gifts, depending on donor intent, can be restricted or unrestricted. So it kind of the donor can say where they'd like to see the funds used, and you have to honor that if you accept the gift. Then we have planned and deferred gifts, which are contributions made to your organization through an estate. This can include equity, life insurance, real estate, personal property, and or cash. And most of the time that we think of these as being gifts that are made after the donor has passed, but some of them can be made while the donor is still living. Then we have endowment funds, which are investments which an organization can withdraw the interest from. Now, typically it takes thousands of dollars to get an endowment fund started. But once you have one, using that average interest calculation, this type of investment can provide a routine funding source for organizations. Depending on how the endowment was set up, these can be restricted or unrestricted funds. Then we have grants. Grants are funds given to an organization from an entity such as a corporate foundation, a family foundation, or the government, and they have a very specific purpose and desired outcome. This funding is restricted to be used only for the stated reasons in the grant agreement and the budget that you put forward in your grant proposal. As Karen mentioned, if you get 3 grants for the same thing, you can go back to the funder and you can adjust those things, but you want to make sure it's documented in your grant agreement, as this is really restricted funding. And grants often come with required evaluation. So depending on capacity, grants can provide a little more work on the back end than some of the more flexible gifts like annual funds. And then we have event sponsorships. And I just wanted to mention this one because it's really the only revenue type on here that comes with benefits. And those benefits are given to normally corporate or business partners. They're outlined, a list of deliverables that the company receives. So it could be seats at a table for your event. It could be a logo on the front of the program. And typically these funds are restricted to the event that the company is sponsoring. And I do see in the chat, Liz is asking for a fund development plan template, and I absolutely plan on sending that out in the email follow-up tomorrow. So watch for that. It's coming, I promise. Next, we have different strategies for diversifying your funding. So you figured out what kind of gifts you're soliciting and that mix. So these are some strategies you can use when working with prospective and active donors. So the most effective way to raise money is by asking individuals. If you're going to invest in learning a fundraising technique, asking a person face-to-face or over the phone is the direction you want to go. It just has the highest rates of being able to close the donation and get it and move forward with it. But it also takes a lot of time building that relationship. Depending on your capacity, it might not be something you're able to focus on right now. I get it. So we'll talk about some other strategies as well. Direct and email marketing. These are great for opening the door. Sometimes you can get new donors small gifts just as a response. They read the letter, they like what you're doing, they put a check in the envelope, they go on your website, they donate, and it's over. But that's not always. So it's important when you're thinking about doing a direct mail or email solicitation campaign to have follow-up strategies, which could be then that individual asking. Two things that are a little newer to the field are peer-to-peer fundraising. Commonly used as Facebook birthdays. That's one I see a lot, as well as crowdfunding. And I think the most common one I see there is GoFundMe. These are, like I said, they're new. Some people have found success. Anecdotally, I've heard more success stories about peer-to-peer fundraising than crowdfunding in the UP, unless there is a match on the crowdfunding. So very specific programs qualify for specifically the MEDC, the Michigan Economic Development Corporation's public spaces, community places program. So if you're doing something in a public space, that's a really great option. One of the downfalls to peer-to-peer, especially if you're using social media and some crowdfunding platforms, is that donor data may not make it to you. Specifically Facebook and Instagram, really difficult to get donor information from those platforms. So just if you're doing kind of like a one-off fundraiser, or you have peer-to-peer, you have people who are really passionate about your mission, that works. They can do that. They can thank their friends. Just know that you probably won't have the opportunity to thank those donors. Then we have special events, which were all in person, but now we're seeing more and more organizations do virtual events too. And these are gatherings that provide an opportunity to give, in addition to raising funds through activities like ticket sales, raffles, auctions, etc. So there's a lot of legwork that go into special events. There's a number of activities happening at them that allow you to raise money, but they are a big commitment. They are a lot of work. So that's something to keep in mind as you develop your fund development plan. Then we have fee-for-service and contracts. This is sometimes overlooked as a stream for nonprofits. You absolutely can charge for your services. Both the fee-for-service model and the contracts model allow for revenue generation by providing a mission-aligned service to the community. Although not a good fit for everyone, I completely understand, not a good fit for everyone. Some organizations find government contracts, sliding scale services for the community, or even admissions revenue as opportunities that they can build in this category. Memberships, another way to create revenue. This model normally is somewhat similar to the event sponsorships like we talked about earlier, but does benefit the annual fund. And it's for individuals and families. Membership programs provide benefits to the individuals and families that become members, and it gives them little perks for interacting with your organization. Like fee-for-service and contract, this is not a stream that works for everyone, and that's okay. Sponsorships, we've talked about the event sponsorships, but you could also do an annual fund sponsorship campaign where you're providing different benefits than event sponsors would. These would be more year-round benefits. Definitely an option. And then last but not least, we have giving days. So Giving Tuesday, great example, one of my favorites. I could talk to you about Giving Tuesday for a full hour. We're not going to do that. On a giving day, organizations run campaigns with a specific goal for a specific duration of time. Giving days can be topic themed as well. So if there's a national day honoring your mission, that's a great avenue to consider. So now we're going to jump forward in our time machines to this time in 2022. And you've written your fund development plan and you rolled it out. Things look like they're going really good. You're seeing increases in giving, which is exciting. And well, maybe you're not seeing anything because you don't know where to look. And so I want to talk about the financial statements that Karen mentioned earlier, and where to look on them to gauge your progress. So the first thing we want to look at is, was your fundraising goal met? Your overall revenue and income, all the things from the fundraising, different types of fundraising you did you raise the money you said you were going to? And you will find that on the statement of operations in the revenue section. You can look at, depending on what types of things you do, just the total amount of revenue raised should align with that overall revenue fundraising goal. Were the tasks and timelines carried out? So using the monthly statement of operations or creating a cash flow report, you can get an overarching view of when money came in to your organization. And you want to compare that to the timeline because they may or may not match up. So that's something that you can look at. Next up, what worked well and why, and what didn't work well and why? And now this is a hard question to answer. But keeping track of individual initiatives and setting monthly goals can help break down where you're successful and where the plan may not have worked. The why specifically can be the hardest to determine, especially if you're working with donor prospects, because you might not know them. You might not have that relationship with them. And so it's really hard to ask them, like, why didn't you come to our event? Or why didn't you respond to our email solicitation? But you can glean insights and anecdotal feedback from people you do know that may have received it, especially if you're a board member, asking your friends, hey, did you get that letter I sent in the mail? Are you planning on giving? If not, why? And that'll also help you adjust if you know someone just isn't interested in your organization. You can take them off the list and save the stamp. So reflecting back on that is important. And then, of course, the actual cost of raising $1. That goes back to that budget we sent earlier. And you want to look at, if it was upside down, if it costs more than $1 to raise $1, is this a revenue stream we really need to be focusing on right now? Could the resources be used in a better way? Is there something new we could try? You don't want to put all of your eggs in one basket, but it's okay to expand on something that is working as long as it's not the only thing you're doing and it's not something that's volatile to external conditions. So an example of this would be, going all in on grants. And then we have no control over if a funder's priority changes and all of the funding could be gone next year. And that was what we were counting on. So making sure that we have that diversity and that we're not looking at just only one stream, even if it's working. And when we're calculating this actual cost of raising $1, when we're talking about events, I just want to make a note that if you're paying people to plan these events, if you have staff and staff is being paid to plan it, include the staff expense, the payroll expense of those individuals for the hours that they spent on the event in your calculation, because they could be doing another service for your agency with the time that they put into planning and executing the event. And depending on how much it raises, it may or may not have covered the salary that you used on that event. Whew, we made it. We made it to the end of all of my fund development stuff. So it is time for questions. I see we already have a few in the Q&A box. I did just want to remind everyone about the mastermind coming up on Tuesday, next Tuesday, 3 p.m. Eastern. That's also going to be an opportunity to talk about specific scenarios. So if there's something you want to dig deeper in, we can definitely talk about that. Oh, thanks, Karen. There's a slide at the mastermind. But for more general questions, you can use that Q&A box, and Karen and I will be happy to answer them. And looking at it, Karen, I do see a few for you. All right. So first up, the question is, who provides the 990 to GuideStar, and can you remove the Schedule B from what they upload?
I think GuideStar pulls that from the IRS. Like, I don't send it to GuideStar.
Okay.
I think I checked on GuideStar to see if Schedule Bs were included in 990s, and I did not see them. So
Awesome.
they may do that kind of as a service on their end.
Mm-hmm. Interesting. All right, we've got a couple QuickBooks questions now. The first question has to do with that fee, and that is QuickBooks for desktop through Techsoup is $60. Is that per year, or is that a one-time fee?
That's a one-time fee. And most of the time, there are very few changes that they add to the program each year. So you can use that same version usually for a couple of years before you'd need to renew.
Awesome. And then the next one, does QuickBooks have a tool that helps support tracking donors?
A lot of people use customers as donors. So you can set up your customers, and that can become your donor database. So you'll be able to run reports by customer, by, like for the year, different time frames, and be able to compare. So I know some groups use that way.
Awesome. Those are all the questions I'm seeing right now. If you have any additional questions, awesome. This one is for me. If an organization does not have a fundraising donor development plan, who helps put the plan together, and how do you get buy-in from the board? That is a fantastic question. So it depends on the structure of your organization and who has been assigned fund development, right? Because in the end, it's the board's responsibility to make sure that it's getting done, but that doesn't always mean that they're the ones doing it. So when we, as a small organization that is a very working board, put together our fund development plan, it actually came from our strategic plan, because we, in the strategic planning process that my former coworker Chad actually facilitated for us, it really bubbled up that we were doing a really bad job at fundraising. We were just kind of like sending letters out and getting them back. And that was it. We had no idea really who was giving us money. It was bad. So this, through the strategic planning process, fund development became a priority for our board. And that's where we got the buy-in, was through the strategic planning process. So if you are going into strategic planning, looking at fund development as something that could be a priority is a way to get buy-in. The other way, if you're a larger organization and you do have a development staff or people that work on development, it doesn't necessarily need to have the board involved. If you're large enough that your board is only overseeing fundraising from a governance perspective and not really involved in fundraising, you can put that together. And it's great if the board chair is the one making the phone calls, but I know there's organizations where it's the executive director or CEO who makes the phone calls, and that's okay too, as long as the donor is creating a relationship with someone in your organization. Because on both the staff and board side, there's turnover. So just having a solid plan for the role or the tasks being assigned to the role and not the person, so that when there is turnover, you know that, okay, this person's now the board chair, here's what they're getting, or executive director, or whatever that might be, is great. And then how do we start evaluating our current donor list? That's a great question. If you don't have a donor database, it's really hard. It's really, really hard. And it might be something that you start working on today, because today is the day where you can put it in an Excel sheet, or tomorrow, or whenever you have the capacity to do that. And just start from now and work forward. It's really hard to go back and try to figure out, oh, that one check number 492, who was that from? So sometimes it's okay to just not worry about what happened in the past and start today and start working towards the future and creating that.
Yeah, that's a great point. Well, we have a little break here. Again, I want to thank Superior Health Foundation for sponsoring tonight's webinar. We appreciate it. We appreciate your participation. Do we have any other questions, Vic?
Not seeing any questions.
Okay, well, know that we'll be sending you the recording of tonight's webinar, and we'll have a couple of resource handouts that we'll include as well, and the link to get registered for the Member Mastermind a week from today.
Awesome.